Good morning, everybody.
There's Diamond.
Hi, Diamond.
Hey,
You're good.
I
I
was
saw
looking
your
for the
text.
CQ background and I was like, you know what? Well, we got something. It's festive, it's fun, it's
I
clean.
love this. It's giving. It's giving. Honey, I Shrunk the Kids a little bit.
Ah,
I don't
I
know
love it.
if I'm dating myself here because that was my favorite
this
movie.
audience, this audience should understand.
I love it. I love it. I love
Let me just press record and you are good to begin.
All right. Good morning. Good morning. Thank you all for choosing to spend your Friday morning, early afternoon with SECU. So my name is Annie Weinschenk. I'm so excited to be here today. And I oversee university partnerships on behalf of the University of Maryland. Everyone can see my screen, correct? Yeah? Okay, good. Um, I am not a UMD alum, but I pretend to be one. I'm a wannabe. And Ellie and I talked about how I feel welcomed by you all. So thank you for letting me pretend to be a UMD alum. Today I am joined by an amazing resource for all of you. She is an expert on basic personal finance all the way up to really complex issues around finances, whether it's through business banking or just regular products that can help you. Before we get into everything Diamond's going to share, I just wanted to talk about why are we here. So SECU is here. We have a longstanding relationship with the University of Maryland and with the University of Maryland Alumni Association to deliver financial education across the campus. We're not just on the stadium, we're kind of everywhere. What does that mean for you as a UMD alum? So you have a direct path to membership. CQ is a Maryland's largest credit union. We are a not-for-profit banking model, which is a cooperative banking model. So at the end of the year, nothing against Bank of America. I have many other banking financial institutions, but at the end of the year, Bank of America profits might go to their investors. When you're a member at CQ, it goes back to you in the form of lower rates and fewer fees. I would be remiss if I didn't talk about CQ's best kept secret, which is the Virtual Financial Center. That is where you will find Diamond Frazier. Diamond, like I said, is gracing us today with this topic, but she's actually a virtual member business advisor. So she's an expert on entrepreneurship, business banking products and services that can help you grow your business. But our virtual financial center, you can bank from your phone, you can bank from your laptop, you can bank from your desk, from your couch, from your bed if you want, meaning you don't have to go into one of our 24 branches. You can do everything that you need right from the comfort of your own home. You don't have to drive in. However, I think there's two services that you can't do in our virtual center. I think notary, obviously, we might need to, if you need to get something signed. And if you do have to get that check for potentially your car loan, you need to go pick that up at a branch. However, everything else can be done virtually. Like I said, we have 24 locations across the state of Maryland. Just by being a UMD alum, you have a path to membership. So what does becoming a member mean for you all? It means you could potentially get $350 in your account and this awesome Terps debit card. We have a Terps script and an M that you can choose from, and it offers lots of really fun benefits for you all if you're at the stadium, whether you're at Xfinity or CQ Stadium, and a discount on all your gear. We know you alums love your UMD gear, so think about that, and all you have to do is show your CQ card. I talked about 350. If you open a CQ Total Checking and Rewards as well as our savings account, so that's the path to membership, we'll open your savings account for $10. We'll deposit $350 within 90 days to your checking account. There are stipulations, of course, nothing's free. You do have to sign up for e-statements and then those two direct deposits. It doesn't have to be your whole paycheck. It could be a portion of your paycheck. I always recommend everyone to have a commercial bank and a credit union. If you're already a NASA Federal or a Navy Federal or a USAA or whatever, great. We love other credit unions. By joining CQ, you also have access to over 50,000 ATMs across the whole country, whether you live in Denver or Baltimore. Okay, Diamond, these slides got a little wonky. This is our first time doing these slides, Ellie, so I apologize. These slides got a little wonky. Just do your best here. But without further ado, I am going to pass it over to Diamond Frazier. Before she gets started, please write in the chat if you are a CQ member. I will be giving out $15 Shell gift cards throughout the presentation. So please go ahead and let me know, and then we will randomly pick. All right, Diamond, I'm going to mute myself. Everybody's favorite thing.
Thank you. We love when you talk. We love your personality. Shout out to everybody from all over the globe joining. This is very exciting. And as Annie said, I'm Diamond Frazier. I work in the virtual financial center. So wherever you are in the comfort of your home, I am happy to help, from as little as I don't know anything about finances to, hey, I'm ready to transform my life financially. So I'm excited to talk about the Glow Up series. It's very fun. We want to, just be better at finances, really understand what's going on. So today we're going to talk about money magic. Financial freedom has been such a buzzword, but the real question is, how do you even achieve that? And then where wealth starts, swiping smart, and to be able to weather any storm. All right. So, one of the main things whenever you're glowing up in life, whether it's finances, it's your body, your fitness, your goals, confidence is A1. That is something that's very important. And when it comes to money, if you don't know where your money is, you don't know how much you make, you don't know where it's going, any uncertainty births lack of confidence. And so I want to make sure that by the end of this, you feel confident at least where your money is going, what's happening, and to at least have a plan. So I want to talk about certain things that are going to transform our mindsets. There's some stigmas behind money, there's some myths. A lot of our ideas and our feelings about it come from our families, stuff that we've seen, things that we experience in our own life. But with anything in life, you don't have to be stagnant in a mindset. New information brings new perspective. So hopefully you'll learn something new, or it'll confirm something that you were already thinking. And so we're definitely going to take control step by step and making some small intentional moves. So let's get ready for the glow up. So, question for today, everybody in the chat, if you can tell me, what financial advice would you have given your younger self? And I know some of you may already be young. I'm fairly young, but younger. As you're typing, I'll tell you, I wish that buy Tesla. I wish I was saving when I was 5. Like the first time I got money for my birthday, I wish I set aside something, because as an adult, I think about all the years that I've worked and I'm like, where did the money all go? Where is it? I've spent years and years in the work world and the money is gone. So if I was younger, I would have said save something. Even if it's $1, even if it's $5, 20 years later, it would have accumulated into something for sure. So I'm looking at some of the things in the chat. Buy a Tesla, open high yield savings. Definitely earn money on your money. Invest, savings, investing. Yes, a lot of commonality there. That is very, very, very essential. All right, so the basics of budgeting. So this is the magic wand. I'm sure all of you probably have seen that 50, 30, 20 method. This is not the only way to go, but for those that may be new to them. So the 50% is your needs. This is I have to have no matter what. I need my lights on. I need my mortgage, my rent paid, somewhere to lay my head. I got to get gas to and from. Like these are just no matter what happens, I have to pay this. And that should be 50%. 30% is your wants. I want to have fun. I want my self-care. I'm going to the mall. I'm going shopping. I just want to do whatever is going to make me happy, support my family, all these fun things. And then making sure you save. That 20% can also go to certain debt payments, as well. But a lot of times it's known for savings. So before we go to the next slide, I do kind of want to break this down. Think about when you get paid, right? We typically get paid bi-weekly. So imagine 50%, that one check taking care of all of your expenses. That's how it really should be. So this is the rule of thumb, but for a lot of us, it's not necessarily our reality, but it should be when you get that one check, everything is paid off, and now you can have fun and really do what you want and save with that next check. If you can't do that, that is A-okay. It might look like 60-40. It might be 70-30. You alter it based off of your situation. Savings and budgeting is really a plan for your money. But I'm big on, instead of always playing small, find ways to make more money so you can increase that and you can really see that 50%, that one paycheck being able to take care of all of your needs. So, budgeting best practices. So, whenever you're setting a budget, as I'm sure you all know, you have your short term and your long term. So, your short term, hey, I'm going on vacation in the next 6 months. This is how much the ticket is going to cost, the airfare, if I want to eat, a new outfit. I maybe got to get my hair done. I wanted to get something for my friends. I need some souvenirs. Like, really start tracking down all of the things that you probably won't even think of. The Uber ride while you're out of town. Really figure out what that amount is. Think about how long it's going to be from when your vacation is from now until vacation, and write down, okay, if I need $500, how long is it going to take me from today 6 months later to save 500? And make sure you're breaking it down every paycheck and putting that amount aside. It could be a long-term goal. Some people that already don't have a home, or and you're interested in buying a home, not only are you worried about paying that monthly mortgage payment, you also have to think about the down payment, which is a lot of money. Not always people have money in their back pocket to go pull that out. So start thinking about, how much is it actually going to cost me to buy a home? How long is it going to take me to save this money? And really, again, set that plan. If I want to purchase a home within 10 years, and the homes that I'm looking at on Zillow or Redfin or whatever fancy, nice neighborhood, or maybe like modest neighborhood, figure out what that cost is, what it is that you're really going to need. Think strategically, how long do I want to achieve that? And set a plan for that long-term goal, that no matter what happens with the paycheck, I have to pay everything and I have to save towards this big goal. And so, like we talked about before, there's a lot of different budgeting methods. If you were on a little bit earlier, Tristina talked about some of those, even with debt payment and savings and different things like that. There's the zero-based budgeting. So every single dollar is allotted somewhere where at the end of the day, it is zero, nothing left over. That is near and dear to me, because if there's anything left over, I am a DoorDash girl. I will buy food all day, breakfast, lunch, and dinner. I'm not a cooker because I just like it already pre-made. But if I know that extra little coin is on the side, I'm going to wrongfully spend it. But if I make sure every dollar has a job, I'm going to ensure that it's already taken care of. So when you're building out your budget, you want to list your income. That's your full-time, your part-time, any money that you know is coming in from investments. Think about all the money that you're actually making. What do you have to work with? And then determine your current spending. Go into your online banking account, look in your history, see where your money is actually going. I'm going to bring DoorDash again. I went to my credit card a couple of years ago, and I said, you know what? I'm just going to write down on the side how much DoorDash is just over the course of a month. It was $3,000. Whenever your credit card is hooked up to something, you just naturally swipe and you don't think about it. And a lot of times we don't want to look at it. But whether you look at it or not, it's there. It's kind of like with people, whether you tell the truth or not, the truth is the truth. It is there. So just figuring out really where your money is going and what's important to you. So list all of your expenses. Again, that 50% if you can. What do you have to have? And then prioritize the expenses. And so it doesn't always have to be a budget is just so stuffy and not fun. You should make sure that you include those fun things. So if you like getting your hair and nails done, if you have to get your hair cut, if you want to get your car washed every 2 weeks, make sure that you're making that a part of your budget so that you're not suffering and have to look at it as an afterthought or swipe a credit card unnecessarily, when if you include it in your budget, you would have been good to go. So write down what's priority and then kind of work your way down from there. So every time I do get paid, I have just a notebook, the amount that I get paid. I write down all my bills. And then when that check hits, everything's moving and allotted. And you can automate things as well. I'm a little controlling, so I like to do everything myself and move in point. But you just really figure out what's best for you and do those things.
She's a Virgo, guys. Just like me. A little controlling. That's why I love it.
Absolutely. Honesty is the best policy. So common budget fails. So one of the Things I see all the time is forgetting the small expenses. You ever see those Apple payments that just come out of nowhere? People that use Cash App a lot, there's these things that are deducted, and you're like, where did this even come from? Whether it's Microsoft, it's something you could have set up a subscription for and it's paid annually. And then you're looking like, what is going on? Please, please, please. It's just a quick set on your calendar, whether you're an Outlook girl, an Outlook guy, whether you're just texting reminders or whatever, set the date. Hey, this subscription's ending on this day. Pay attention to those things. Sometimes you just swipe and you just don't see, and that's a part of the budget as well. That could take you from $100 to $98. And there's a difference. So just paying attention to those small things and not budgeting for annual costs. Oh my goodness, whether it's your registration for your car that popped up on me. It's not something that happens all the time. Some people, I think you could do it every 2 years, or they have it where you could pay like a once a year type thing. But those things that come out of the blue, and like I said, those subscriptions, those things that only happen once a year, if you do have subscription based things, instead of paying that monthly and you do that one time, please set yourself with a reminder. And it might just be a reminder to cancel it before it renews. It might be a reminder to, hey, when this next check comes, let me put that aside, so when that auto pay comes, it's already taken care of. So calendar, I have probably so many calendars. If you don't do that and you're big on your phone and tech, use the phone calendar. Please, 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 please. And then thinking I remember everything. Oh yeah. You remember in the moment. Happens to me all the time. I'm like, oh, I don't need to write that down. Like, I'm fine. Like, that's something that's important. And then, oh my gosh, like, I'm the type of person, I'm so dramatic in the moment. I'm like, oh my gosh, I forgot. You don't have to do that at all. If you just write it down, you're human. You make mistakes. You might forget. You probably have an amazing life, a lot of great things going on, and these little minute things just pass you by. So please don't think you'll remember everything, because you probably won't. And then not paying yourself first. That is huge. That is huge, 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 because when we'll probably talk about emergency funds, but whatever you need money, or you want to build your savings, or you want to invest in your future, if you do not pay yourself first, when things come up, you are looking and scrambling, where is this money going to come from? But if you make sure you put yourself on the priority list, then you cannot go wrong. So always expenses, and one of those expenses must be yourself. Pay yourself. You work hard, you deserve it. Your full check shouldn't go to everybody and all these companies that you have to pay. You are important. You've done the work. And so let's start shifting mindset. So as I talked about, we're going to do some transformation in the minds. And so when you tell yourself you're bad with money, you are going to be mad with money. Your belief system dictates your actions more than anything. And saying these things might seem like trivial, but they really do show up. So we'll shift, and I'm learning to make money work for me. That mindset, I'm bad for money, and just start training your brain, with these mantras. It's very popularized now to talk about affirmations, and really to affirm something is to declare it true. So we are going to start shifting how we're speaking. So yeah, just reframing your mindset. So like we talked about before, I wish I started saving at 5. Woulda, shoulda, coulda. I am years beyond 5 years old. And so at this point, instead of, okay, well, I should have done that, the mindset is now, oh, I'm going to save, because, willingly I'll be here at 70 plus. I'm like, dang, I'm glad I did start saving in my younger years, and start working it up. So anything where you feel like I should have done that before, today is the day to start. If you haven't already, just shift your mindset, and you'll see how your life and your finances will start to transform. CQ budgeting tools. CQ has so many tools. I love using them, and you'll probably be able to see this on your own. If you just go to cqmd.org and type in calculators or budgeting tools, it will pop up for you. So even as low as before you even decide to buy a car, really understanding what that payment is going to be, write it out as a hypothetical. Okay, if I actually do go get this car, this is what my payment could be. How is that going to affect the current budget that I have? If I do want to go and purchase this home, right now I'm living with my parents, maybe $300, $500 a month. If I go and get this mortgage, that's going to be $2,500. How is that going to affect certain things? Do I need to wait and apply for another job and get an increase? Do I need to start working on my business? This will help you for the before. So I don't want to say the worst thing, but because there could be worser things. or more worse things. But you want to plan ahead of time. There's so many calculators to help you start planning and predicting before. The worst thing is already being, trying to keep your head above water when you have preventative tools, essentially. Just like there's medicine to prevent you from getting sick and eating healthy and exercising, there are calculators that can help you and let you know reality before it sets in.
I would just say that CQ has some amazing calculators, like Diamond said, but one of my favorite things is this financial wellness. Now, the truth hurts. Sometimes it tells me you spent all your money on food this month, and I will have to take a step back and be like, wow, that is not what I wanted, right? I wanted to see you saved. You're an amazing saver. You're a super saver. So sometimes what it tells me I don't like. I don't want to hear it, but doesn't lie. So take a look at where your money is going.
I'm glad you pointed that out because yeah, that is very important. A lot of times we don't know. Like I said, I've worked for so many years and I'm like, where did the money go? But you start to see what's important to you so you can fix that in your budget. And then you'll also see, hey, I'm carelessly spending on this thing. These are ways that I can cut down. So really just facing reality because whether you look at it or not, it is there. So magic moves you can make today. So download a budgeting app. There are tools within CQ. I believe we'll get there, but looking at your credit score, you can see that CQ has that now. There's a cute quiz that's integrated in the app where you can answer different questions about your finance and it'll give you advice and then also prompt you to be able to make an appointment free of charge. You can ask 100 trillion questions about your finance specific to you and get someone who's an expert. Like I said, Trustino's here, I'm here, the whole virtual team, CQ Financial Partners, whatever you want to do, how no matter how small or big you think it is, we can help you get from point A to point B. That's a part of the benefits of being with the credit union, with being with CQ. You don't have to do it by yourself. We have the capacity to do it. We work to do it. This is a part of our job. Why not utilize this free tool? And so, back to the saving thing, 70% of retirees would give one piece of advice to the younger self: start saving earlier. I've seen a lot of you say that investing earlier. Well, part of saving is investing. And so, being smart on where your money is going. Some people have a lot of money off of their 9 to 5. Some people have money off of their business, but your money should make money. Every dollar should have a job, whether its job is to pay for expenses or its job is to accumulate more money. And so where you put your savings is very essential. So there are traditional savings accounts with every institution in CQ as well. Right now, it doesn't really pay well. So you want to be very mindful of that. 0.1% or 0.01% on your savings is not going to get you anything. That's not it working for itself, but it's a requirement. So make sure you have it there. You'll probably want to have the least amount of money there, and you can use other avenues to grow your funds. So we do have a money market account. So with there, a minimum of $2,000. Again, a little bit on the lower side because we're rewarding you for maintaining your deposits with us. So the CD is really where that sweet spot is when you'll start making money on your money. So if you're like me or some people where you start saving money and then you start transferring over to your checking account, saving, transferring over to the checking account, saving, and just keep transferring it. And then you're like, okay, I'm trying to save, but I'm not. That CD is your accountability partner. I said, you know what? I'm going to lock this money in. I can't just willingly go transfer into my urges. I have to ensure that I set in and do this agreement, like I said. So, speaking of CDs, our current offer right now for 6 months. So, again, if you're saving for that vacation or you're not sure what you're going to need the money for, but you can lock it in for 6 months. Why not earn 4.25% on your rates? And so part of those calculators is being able to enter in how much you're saving, what that rate is, how it compounds, and then you'll actually know how much money you're going to earn. And so if it's sitting there, it's not going to earn anything. If you're going to spend it, you didn't earn anything. So you might as well lock it up. Again, CD, your accountability partner, lock it up and have your money make money. And then, of course, the 9 month as well. If you're able to save for a longer period of time and you say, you know what, I don't really need this money, lock it up, have it earn money. Don't just have it sitting there not doing it. Make it work for you. And the CD is one of the easiest ways to make your money work for you.
Love it. And I said this on the last session. I'm going to go back. Sorry. I said this on the last session, so I apologize if you already heard this. In full disclosure, A credit union is not always going to have the best money market rates. That's why I tell people potentially look at other rates, do your research. Credit unions have very good CD rates, market leading. So if you're going to take that leap and you're going to do this CD, consider a CD with a credit union, not a commercial bank. Okay. Similarly to the money market.
Yes, completely agree. I will give us a little bit of credit. If you are a business owner and you do have a lot of money coming in from your business, our money market on the business side definitely does pay you for sure. Even just having money in the checking account, 2%. So, those that are business owners out there, or you're planning or you're building, this is a great space to have your money, especially for reserves for your business, because you will earn some money on that for sure. And
And
then
this
this
is
is a
why
great.
Diamond's an expert, right? Because I didn't know that, right? So this is why we have her here. So listen to the experts, don't listen to the non-experts.
First of all, you are amazing at personal finance, and you do know things as well. It's teamwork going on there. It's
But
teamwork.
actually, someone did just ask a question. I know we're going to reserve questions for the end, but I did want to see if you could hit on this. What happens at the end of your 6-month, 9-month period with your CD? What do you do?
Well, you got options. So when it ends, you can decide, you know what, I actually still don't need it. Let me roll it back in. And before you make that decision, you want to see what the rate is at that time. Again, using that free calculator. All right, if I say I'm going to lock it back into that 6 month, how much am I going to earn this time? The rates might go down. So you know what, maybe you don't want to do a 6 month. Maybe that 9 month is paying you more. So at the end of that term, if you don't need the funds and you're like, hey, I can lock it up for some more, start using that calculator to figure out the best place for this money to go. If that 6 months is up and now you needed it for vacation and you were able to make some money on that, some extra spending, go ahead and spend it. So you can spend it if you like, transfer it, as you need, or lock it back up into something that supports you better. Or depending on where you're at with your savings, if you want to actually invest it in the market, you can work with CQ Financial Partners and we can definitely up that earning. And so sometimes it might be we can do that percentage, that 4 or 5 or 3% for a longer period of time if you put in the market and you have some patience. So it's a lot of options that you have.
And then does the business CD need to be held by an LLC or an S corp?
So that's either or. So the legal structure can be any legal structure for the business entity. Either one is fine for a business CD.
Love it. So this slide just wanted to call out our credit union. We have compound interest quarterly, not monthly. And so this is just an example to show you. I don't know if Diamond, you want to walk them through this?
Yeah, so making sure you use that calculator. So if it's telling you that ahead of time your CD will be worth $12,210. So this breakdown is showing you, hey, with the initial deposit that you put in there, if you put in 10,000 and you want to do it for 5 years and you have this interest rate, then you'll earn $2,210. So that's $2,210 that you did not have to work for. And one mistake that I've made is I'm like, oh, that's not really a lot. And the next thing you know, the $10,000 is gone because of the mindset that I had. And so again, going back to the market, it's that slow earning. And when that interest compounds on top of, so now you've earned that 12,210, and then whatever rate you get, you can earn that on top instead of that initial 10. So really playing with those calculators and really seeing how you're going to make. And also, as we know, with savings and investing, it's a long-term game. You can make quick money if you're buying and selling house and real estate and different things like that. Another topic for another day. But having patience is a virtue, and you can really make some money if you take your time with things.
So many people tell me, Annie, I'm just going to have passive income. Well, buying and selling, flipping houses, that's not passive. Being a TikTok influencer, that's not passive. That takes work, that takes money, that takes investment. The what passive income is this. Okay? Crypto also, I know everybody's hot on blockchain. If that works for you, do it. Bitcoin, whatever's next. However, know going into it that it is risky. Okay. So CDs are the safest sort of bet for you to earn that interest and meet your financial goals.
Absolutely. So APY is the annual percentage yield. It is probably one of the biggest questions in the world. Well, what's the difference between an APY and an APR? I hear it all day long because truthfully, I'm looking at a sheet, I'm seeing two different rates with two different names. I don't get it. The APY is really just that longer term. It's telling you how much you're going to earn because in your CD, it will be compounded quarterly. So that's kind of giving you that overview for those manual calculations or using a calculator, and the APR is the rate at which it's increasing over time. So it's just a little bit of a difference, but that rate is what you'll use in the calculator to help you determine if I do agree to set aside the money for this time at this rate, this is how much that I'll make. And so, as it says there, it's free money. It's free money for sure. And so, yes, compound interest. This is a money maker for sure. Any savings product that you get, make sure you ask, will this be compounded and how frequently will it be compounded? Because sometimes it might be, depending on the institution, it could be quarterly, it could be annually, it could be every month. That is really important because you'll know how fast your money will grow. And so while you may put $10,000 aside and that money is growing, when it gets to the compounding, it's not only going to earn more on the 10,000 of the initial deposit, it's going to earn on top of the money that you've accumulated. So that compound is another really great tool to earn that additional money. Of course, can be done in a CD, but it can also be done in the market as well. And that's why a lot of people will invest their money in different, different places in different ways, and it'll help you grow at different rates. Savings starter kit. I love a starter kit. This sounds very glow uppy. I love it. So yeah, start small. Seriously, I know you probably heard it a trillion times. Start small. $5, $10. I am really big on social media. I love it. Definitely a thief of joy. You'll see stuff that says, "Hey, by the time you're 30, make sure you're saving 5,000 every month." And I'm looking at my money. I'm like, where's this 5,000 every month extra going to come from? Be real about your circumstance, and nothing is too small to save. Like I said, if you were saving $1 since you were 5, imagine where you would be at now, especially with that compounded interest. Try many saving challenges. One of them that I love is the 52-week challenge. You save the same dollar amount as the week that you're in. So the first week, $1, second week, $2, and so on and so forth. You can really just Google that. There's so many different fun ones. Do it with your friend. Even when it comes to just glowing up in general, even if it's working out, sometimes you might not have the motivation to do it by yourself. But if you have an accountability partner, i.e. your CD or your friend, and say, "Hey, let's do this saving challenge together," and you're kind of keeping up. All right, did you make sure you put this aside? So a lot of different ways. Sometimes just make it fun. Budgeting can sound very boring, but sometimes the most boring things are the best for you, like broccoli. And so use found money. So that fun money that you just don't know is coming your way. Like with taxes, sometimes we kind of guesstimate how much we think we're going to get, but whatever that is, oh, you love broccoli. Whatever it is, just make sure that you have a plan with it. That extra money is not necessarily just go out and have fun. Think about what you need. Go back to what your goals are. What is those short terms, those long terms? Paying yourself first. So any extra thing that comes your way, whether you got an increase, whether it's your birthday, those types of pay, use that for yourself and use it strategically. And then automate it and kind of forget it sometimes. So automated for sure. Like I said, a little bit on the controlling side, Virgo girl. I will write down everything and I like to do it. But for those that say, you know what, I don't want to go and do all that manual work, set it up that one time. Whether it is, all right, this is going to go to the Roth. This is going to go to my add-on CD. This is going to go to this account and I'm going to have these auto pay set up. Just automate it. If you don't like to just do all these things and just move around, get it done in one day. Set it up for yourself. And back to that mindset, we cannot talk about glow up without shifting the mindset and transforming. So I don't make enough to save. As I said before, if you make something, you can save something. And I know a lot of times there's bills that creep up, that parking ticket, that random thing that comes up, you got to renew your ID, all these types of things. Even if it is $5, even if it's $1, it is more than what you had. And sometimes you might want to buy something that's $12 and you have 11, and that $1 that you saved that you were thinking like it's not going to be anything, that will really help you. I promise you. So you can start small and you can build from there. That's where the compounding comes in and diversifying where your savings is. You don't have to worry about these big savings. Let the money make the money for you. You worry about the little small stuff and let the market do its thing. So just shifting your mindset and make sure you save. So credit, we love credit. If you're with Trustine, I think she talked a little bit about credit. So you might hear a little overlap there, but this is just emphasizing. And if you just came in, this is something that you should definitely hear. Credit is so important. So, what is a credit score? So, if you didn't know, it does range between 300 and 850. That score is just saying how how likely is it that I'm going to get my money back? If I'm going to let you borrow something, I'm going to use this thing to see, am I really going to get it back? And also at what rate? Are you going to take a long time to pay me back? Are you going to pay me back on time? Are you going to give me a little bit? Are you going to pay it off in full? So that gives the full picture. Because if you didn't know someone, I don't know if you would just be willingly, giving them out money. You might got to go and look and say, hey, has she actually paid this person back before? Has she, did she pay you back on time? Did she take too long? So that's what that credit report does. And that's what that credit score does. Lets us know, hey, before we stick our neck out for you, what have you done with other people? And so this is a breakdown. The main thing is your payment history. Did you pay them back and did you pay them back on time? Credit utilization. Are you that 30% is the sweet spot? A lot of people will give you a little bit different percentages, but 30% of your credit line is where you really want to be. You don't want it to look like you're living off of the credit. Whether that's reality or not, if it looks like that, the next person might not give the money to you because it looks like you need the credit. You don't want them to think that. Keep it at that 30% or below. And then length of history. You might have got lucky. Maybe you paid somebody back on time, last month and you just started your credit. But if you have that long history, I can see longer how well are you able to pay someone back. If you got a 30-year mortgage, if you were able to make good payments for 10 years straight, I'm going to trust you more. And that's what that shows in that credit mix. You might be great with paying a car back because you have to get to and from. But what about those unsecured products where there's not much we can really take from you? So that diversification, that mix of credit lets us know, all right, you might pay a car back because you don't want to risk your car. But hey, something that doesn't have collateral, you'll actually pay that back too. So SECU, when you get an account with us, if you're already a member, thank you, thank you, thank you. If not, there's a million ways to become a member. Being UMD related, knowing Annie is enough. Being in Maryland, have known somebody, right? You could be a member. But within our app, as other institution as well, but you can check your score. So that myth of if you look at your score, it goes down. I don't know where that came from. It is not true. You can look at it 100 trillion times a day, all you want. You'll know what it is. And this will also help you, again, calculate before you get that credit card, before you get that loan or whatever. What is your credit score? So then you'll have an idea of what your rate is, and then you'll know how much more you have to pay back over time.
I would just say the myth of does checking your score hurt your score, that came about because people, if say I decide one day to go to dealership A, B, C, D, E, and I ask them to borrow money at each one in one day, that's going to all report to the credit bureau and they're going to be like, what is going on with Annie? Like, is she in some kind of trouble? It looks unpredictable. The credit score is there to have a numerical prediction. It does not define you. It's malleable. You can change it. If you've made mistakes, it's okay. It's all good. And we can help you. I'm gonna go a little fast because we've got about 11 minutes. I want to make sure that we pause for questions, but go ahead and I'm just gonna go. Okay.
Okay, yeah. And just real quick, yes, looking at the score does not hurt your score. But if you're inquiring about credit and you have your credit pulled, that will hurt you, yes. Swipe responsibly, like I said, do not use more than 30%. If you don't have to, if you do, just make sure you pay it off or pay it down. Pay it down to that 30% if you can't pay it off by that due date, because that'll reflect as well. And then pay very close attention to the APR. A lot of credit cards do have variable rates. Some people think that the rate that you get is the rate that you get, and it can fluctuate. So that rate is so important because it'll let you know how much more you're giving. So you might buy this $20 shirt, but you might end up paying $50 for a shirt that was $20 because you didn't just pay it off and you didn't take care of it. So please pay it on time, pay it in full if you can, and pay attention to those things.
It says close out accounts. We talked about from in the last session. Don't close accounts unless you're ready to strategically work with a financial, either a banker or someone who knows. Don't just go close your accounts. If you're going to close a credit card, make sure an expert is with you along the way. If you're not using that credit card because your credit score is great, you don't really need it, put it in the drawer. Don't look at it.
Yes. Yes, yes, yes. You are absolutely right. Or if you can, just put it on your calendar to use it once a year, because if not, it will close out. Because just like a little insider, as an institution, whenever you have accounts on the books, you have to pay for those accounts. So if you're not using it, you're costing us money, and then we'll close it out. So to avoid that, just swipe it for something, your everyday gas, groceries, or whatever, earn some points, earn money on it, and just get rid of it. So for financial toughness, that's just having that savings account, being able to have something in your back pocket. If something comes up, you won't even be in a frantic because you've already been saving your $5 per paycheck or $25 for paychecks. These things happen all the time. And some people say, well, I can't plan for that. No, you can. That's what your savings was doing. It was planning for those things that you weren't expecting. It's why they call it emergency savings, because who plans for an emergency? They just happen. So, well, there you go. First line of defense. See if you have the money saved. If you've been doing that and you put that a part of your plan, you're paying yourself first, you're making your emergency fund a bill of yours to pay. You will be good to go. You can start small, and even says 5 to 1,000. Maybe you have $25 like me. But as your money increase, it might be more and more and more. And you're doing those things, those 3 to 6 month plans that we talked about. Whatever it is that you want to do, set a plan. And that's for anything in life, but especially finances.
And I just talked about on the last session, 3 to 6 months is what we recommend. But given things happening, tariffs, unexpected industry shifts, shakeups, people losing jobs, maybe do 6 to 12 months.
Yep, absolutely.
And then if you can put in the chat, if you have an emergency fund, I will give out our last gift card for this session.
Ooh, that's exciting. I love this. Insurance is definitely a financial armor. We don't have a lot of time, but I could tell you about insurance just from a space of wealth building. But this is definitely your emergency. Insurance is really from a space of like, hey, in case this thing's happen, I am good. I'm gonna take care of. As we know, car insurance, you have to have it. Health insurance, it will be great to have because you might think that I'm healthy, I'm young, anything could happen and you just don't know. I mean, I don't know what's going on in my body right now, what's moving and configuring. It's better to just have the insurance than to pay that hefty bill out of pocket. Even though you might have an emergency savings, why pay $5,000 for a surgery when you can, pay your copay a couple of times? Renters insurance, a lot of times when you are renting, they actually require it now. But we've seen a lot of things with house fires in California and different places, and stuff happens, floods, things like that. That renters insurance, keep a tab of the things that you have and that you buy, your receipts, just kind of jot down like, hey, as I'm looking around my dresser, my bed, this is how much these things cost. Put it aside because if something happens, that renter's insurance can kick in and now you'll be able to at least have something be taken care of so you can restore those items. And fraud happens so many times. People are like, oh, someone got my credit card number. How did they do this? My debit card. How did they do this? It doesn't matter where you go. You just cannot hide. But there are things that you can do to protect yourself. You can freeze your credit reports or your credit with the credit bureaus so that you don't have to worry about somebody trying to apply for something in your name. It's already frozen. You have a special code that no one can just go and get. It's only you. Just as we continue, I think the next slide, it'll just be like, there's random things that might come up that just don't seem normal. Like, we're not going to ask you for your PIN number to your debit card or just certain things that just don't sound right. If it doesn't sound right, just hang up the phone. Call somebody that you've met Trustina, Annie, me. The thing about SECU, the great thing is you probably know someone on the first name basis. A lot of institutions, you probably don't know the people. You know us. Call us, email us, text us, whatever. We will make sure you are well taken care of. And then you can see in the stats right there, billions of dollars lost, millions of dollars lost just on fraud. So a part of that, I don't really check my account. I'm not worried about it. You not checking your account can sometimes cost you, because even if you find something that might have happened a year ago, there are still time frames in which you have to report things. So make sure you're checking your account regularly. And it might be not even looking at your expenses, just kind of seeing if there's something off. Is it something odd? If a little amount that came out that you might think is, oh, it's just $2. It's like, if it wasn't your $2, be aware of that and find out who that company is, cut that card, get it shut down, get a new one. Please pay attention, because it's not always about spending carelessly, which is a thing too, but it could be just, trying to protect yourself as well.
I will just say that my mom called me this past week and she was like, "Oh my gosh, I fell for a scam." Okay. I couldn't believe she clicked on it. I was like, "What are you doing? Um, why would you click on that?" She goes, "I just didn't even think about it." So it can happen. So this is great. Urgency, click now. Now, granted, if you won my gift card, you will get an email from me that is legit. It will, you know what you've done. If all of a sudden it says, like, how many people on here get that spam text if you live in Maryland from the MVA? That we now are getting smarter, smarter, smarter. So just be mindful of the scams. Look, somebody just said I was a fraud victim recently. So, yes, I will definitely send some resources to help you with that.
Yes, that would be great. And then on CQ, there's so many articles, there's so many resources there. When I say so many, you can scroll for a while. And our fraud department is top notch. I vouch for them 100%. I have an account with CQ. I mean, I have many accounts, but I definitely have one with CQ. And we're always looking on creative ways to stop these things from happening, whether it's investing in a new tool, a new platform. So we take it as serious as you do, because it's a loss to you is a loss to us. But yeah, Annie will definitely get you those tools. But even just going on cqmd.org and typing in search fraud, you will see so many things that will help you.
And if you're
And
if you
so,
haven't bought sorry, if you haven't bought your house yet, and somebody took your identity and you're trying to get a mortgage, it will catch up to you. You actually have to go through the process of filing a police report. Who knows, that takes time. So say your rental's up, you're trying to buy a house, it will catch up to you and it is ugly.
it definitely is. I'm happy you are a survivor. I love that you use that word, but it definitely happens. And yes, you are right. And I'm sad that it is affecting you still, because sometimes you think you nip something in the bud and something slipped through the cracks. So even if you just have an off day and really just doing an audit of everything, thinking about where you've given your information, where you've purchased things online, please do that and shut everything as soon as possible. If you think it's still some things lingering out, or you kind of want to talk through some of those things with somebody, we're definitely here to help you. And know your tools, because we have so many. Card controls for sure. When you log into online banking, going to management at the top, there's a lot of different things you can do. You can turn it off. If you just lost it, you don't even have to wait for the call center or the virtual center or getting somebody, or just on your own. Hey, I might just be panicking right now. Let me just turn it off just for a peace of mind. You might find it somewhere. So that's really good. Setting limits. If you're not a big spender, if you're not spending, $2,000 a day and you want to protect yourself, you can already set those limits. Hey, this card can only, spend up to this amount. Those are things that are really good. And then real time alerts. I have them as well, whether it's, hey, if my account goes below $10, if a transaction, if a withdrawal happens, if a deposit happens, if this amount comes out. There's so many different things within online banking under alerts that you can tailor to what's important to you, so that you can get a text on your phone or you can get an email preference of yours. But you'll get all the information. So if you don't think to check your account every second, you'll at least be alert as things are happening. And so free credit monitoring via credit card tracker and CQ online banking. Yes, we have that as well. Again, when you log in, there's so many different resources, down to articles, apps, tools, people. You name it, we have it. And then secure messaging, connect with CQ via secure inbox. I love that. Sometimes when you do call in virtual, we may need your social, we may need your ID, and your heart might be pumping like, I can see you, and I know you're not going to do anything with it. But we do actually have a secure box where you can send some of those things. So also sending encrypted emails as well. Like we have that. So whatever you're thinking or you're concerned about or whatever, we probably have the tool to give you a peace of mind.
I wish that we had more time because I feel like the session flew by. I feel like there's still so much that we need to cover, but let's pause for some questions. If anybody has questions, again, I don't know if you know how lucky you are to have this access to Diamond right now. I will send in the follow-up how to make an appointment with her. If you have a small business, if you're an entrepreneur thinking about another business, she is her own business owner of her own nonprofit where she does financial education and empowerment and mentoring for young people. So she's an expert. Okay, she's lived it. This was just a snippet. If anybody's going to stay on, the next one is yes, next session, your money journey never ends. We'll probably go through some of this, but any questions, please put it in the chat on or ask Diamond. She is here and she can help support. Thank you,
Yes,
Diamond.
you're so welcome. Yes,
Shine
no,
bright like a diamond.
shine bright. Yes, I love these things. And to your point, I can talk for hours about finance. I probably did a workshop the other day and it was about 3 hours. And we didn't even realize where the time went because it's just more and more as you're talking, more things come up. I mean, you can name it, I probably know it, and if I don't know it, I'll definitely find the answer. I love learning new things as well. So even if you don't have a question right now, you're not sure, feel free, as Annie sends out the information, I'm happy to do an appointment. You can talk to me virtually just like this, as well. You might find me somewhere, depending on if you are come somewhere in Maryland or you that are all over. I don't know, I travel, but that's my face. My hair is normally like that.
She's a real mover and a shaker. Trust me.
Yes, I'm
She's gonna
everywhere.
she's an amazing resource. And also she made a great point a little bit ago about having a connection. So you all are UMD alums. CQ has a partnership with the Alumni Association. If you ever need anything at all, Ellie, Jim Paris, anybody that works at the Alumni Association knows how to get you to CQ or to me directly, just by being an alum. So this is just a benefit of being a member. So please, yep, there's our landing page. I'll include that in our recap as well. But all of our special offers, promotions, anything that you need, we are here for you. Okay, you got a question here. How many different savings, checkings, credit cards do you think is reasonable? Non-business, but personal. It's a
It
tricky question.
depends. I was
Yeah.
gonna say it depends. It really depends on you. At minimum, of course, the savings account, because anywhere you go, it's normally always required. And then a checking account, that's where your money is moving. That's where things are happening. So whatever is coming in, coming out, whether it's your deposit and your bills, that's where the moving and the shaking is happening in the checking. And with that, if you want to save for something particular and you want to separate it from your savings, we do have additional savings accounts. So, like me, I have, new car, new house, vacation, and then I can just set and just move money there so I can see how much I've saved so far. So, it's really tailored to you and your goals. But I would say if you're saving something specifically, you can create individual savings accounts for that. And then, even with a CD, you can have multiple ones because you can stagger it. So it might be, okay, for 6 months, I want to save this, or I don't want to put all my money in here. I might need it. Or it might be, hey, I don't really need it, 5 years. So it's really based off of you. But again, we're here to help you with the full picture. So you tell us your goal and we can help you set up what it is that's needed. And even with credit card on the personal side, I would say two to three, 2 to 3 for sure. Because personally, I have 7 and I didn't know what I know now. It's nothing wrong with that per se, but if you don't use the cards, they close. And so I'm not thinking about 7 credit cards. I probably got them for balance transfers, those fun 0%, but they will add up. And if you're not using it, it will shut off on its own. I think 2 to 3 are very manageable. And how you pick those is based off of rewards, cash backs, those perks, stuff that has no annual fees. Like we don't have any annual fees or foreign transactions fees. So really just thinking about your personal situation and then what credit cards best suit that. But yeah, no more than 2 than 3 is great.
I agree. I also want to say, and then we've got to hop off to our next session, but um, I tell students, staff, faculty, alumni, any members this. You have to do what's best for you. So I have a Chase credit card because I like the travel rewards. For my everyday credit card, I use my SECU credit card. I've got a Bank of America checking account. I've also, which sometimes is great, sometimes not great. Then I have my SECU checking account that I love. I have a Capital One credit card that I use for certain things. I love getting the rewards, like the Ulta gift cards. I'm a makeup girl. It doesn't look like it, but I am. So I like this. You've got to choose just what Diamond said. You've got to decide what is best for you. The second question was, is CQ offering any relief for federal government employees that are laid off? That's a great thank you for doing my job for me. I need to think about that. I need to ask, can we do, we did just close our grant program, but for people that have their own businesses around financial empowerment, but maybe we could do something around, people that have been laid off. I know during COVID they did loans, not loans. What did they do? It was like um,
You were able to skip your payments,
okay.
and without being penalized, they allowed you to tack it at the end. So the best thing you can do is before things happen, you might want to talk to our collections department. I know collections sound like, oh my gosh, if I'm in trouble, but no, they're a great resource as well to say, hey, this is something that came up. So I want to know, is there any way we can work something out? Maybe tack those payments at the end or kind of configure something off of my personal situation so that you don't have to have them actually calling you if something were to happen. Or if you're a homeowner and you have equity in your home, that's a really great thing for emergency as well as many of things to have that. And even a credit card, as much as it might sound like, oh my gosh, a credit card, like, no, I'm, things are going on right now. If you get a new credit card with us for the first year, it's 0%. So if you know there's certain things that you have to pay for, you don't have to want to worry about that interest just accumulating. That does help. Of course, there's personal loans as well to kind of help you get by while you're looking, but definitely talk to collections. They can definitely help with any type of hardship and preventative care as well.
All right. Thank you so much, Diamond.
You're
Uh,
welcome.
I will send a follow-up note. I like that somebody put that money sign. Oh, it was Jim. Okay, I love that. Okay, Diamond, thank you. Thank
You're
you.
so welcome.
If anybody needs anything, please reach out to me or Diamond. Chris